I have spoken elsewhere as to the fog of war, but as the world now finds itself in yet another war with yet another major oil power, we must also address the fog of oil and its impact on gold. Oil, of course, matters. Regardless of the green energy debates, the world is still decades from being anywhere close to carbon neutral. And like it or not, we live in an energy-centric and hence oil-centric world. This may, for example, explain why tanks, bombs, and policies seems to not so coincidentally revolve around oil-rich areas like Iraq, Libya, Venezuela, and Iran. But I'm not here to opine on foreign policy or good or bad wars. I want to talk about oil and gold. Gold, of course, is rising based on fundamentals, which can no longer be ignored. It's not a typical asset. It's not a typical commodity or metal. It's a monetary metal. It is rising in demand and price because the world now trusts this monetary metal, gold, as a superior store of value and strategic FX reserve asset over paper dollars and US treasuries. And this is not fable, but fact. The objective 5x increase in central bank gold stacking since the US weaponized the dollar in 2022 is a neon flashing confirmation that the world is calling the bluff on paper currencies. And this also explains why gold has been pouring through and then exiting the London and New York gold exchanges at unthinkable levels. It's quite simple. The world wants physical gold, not paper contracts, because the world knows that the direction of gold is now undeniable. 2025 saw 50 all-time highs in gold. And this is not because gold is in a bubble. It's because gold is reemerging as real, more trusted money in global net trade settlements. In short, gold's fundamentals and fundamental direction speak for themselves. But when it comes to oil, there are even more tailwinds for this monetary metal. Now, we don't need to be reminded that Iran is in a very strategic area, and it's also a very strategic oil player, and that 20% of the world's oil flows through the Strait of Hormuz, an area making obvious headlines. As of today, Lloyd's won't even insure shipping through the straits, so the British government has to insure that or cover that cost themselves. In short, it's not crazy to assume potential supply shocks in this global oil trade and these global oil markets, and hence potentially rising oil prices, which they're clearly rising into the month of March from the beginning of this year. It's not a coincidence. And history reminds us that oil shocks can send gold much higher. Let me remind you that in 1973, during OPEC's gold embargo, gold went from $90 an ounce to $180 an ounce in just 12 months. In 1979, during the Iranian Revolution, another oil supply shock took gold from 220 to 850 in a year's time. And then if you fast forward to the 1991 Gulf War, oil was up, gold was up 10% in just a matter of weeks. And of course, most recently in the Ukraine war, when Brent crude broke 130, gold immediately broke this important 2050 key resistance line. So the oil supply shocks and the gold price are intrinsically related and historically confirmed. And as of March 2026, with a war in the headlines, oil is rising. History may not repeat itself, but as Mark Twain reminds us, we know that it rhymes. And based on the case studies from 1973 to today, it's fairly fair to say that gold likely has even more tailwinds and it's already fundamentally secure back.